Welcome to the deep dive. Today, we're really focusing in, taking a close look at semiconductor stocks. It's a complex world out there.
Absolutely. And we've got a screener analysis here looking at the biggest players.
Right. Our mission is to kind of navigate this screener, focusing on the top three: Nvidia, Intel, and AMD. We want to pull out those key insights.
Exactly. This is really for you, the listener, needing more than just numbers. We're talking valuation, financials, the technical charts, and the news that's constantly swirling around them.
Yeah, we'll look at everything from PE ratios to, how much cash they have on hand, even what the CEOs are doing with their stock.
And we'll run some quick paper money scenarios, too, just to see what might have been.
Fun stuff.
But importantly, before we dive in, just a quick reminder. We are reporting solely on the data and news in our source material here.
That's right.
This is purely for informational, educational purposes. It should never be taken as investment advice.
Okay. Got it. So, where do we start? The big one.
Let's start with Nvidia. NVDA, the undisputed leader right now.
Okay, Nvidia, ticker NVDA. This is like ground zero for the AI infrastructure boom, right? Market cap rocketing towards what, $4.4 trillion?
It's massive. And that massive valuation, well, it tells a story right away when you look at the snapshot.
How so?
Well, the trailing PE ratio, 51.76, that's extremely high, signals huge expectations built in.
51, wow.
But look ahead, the forward PE, it drops quite a bit, down to 28.42.
Okay, so the market is basically betting on massive earnings growth next year to kind of grow into that price.
Precisely. They expect earnings to catch up, and quickly. The PEG ratio helps here, too. It's 1.47.
1.47. So usually 1 is considered fair value relative to growth?
Generally, yes. So 1.47 suggests the price is, maybe a little bit ahead of even its phenomenal growth expectations. And the growth has been phenomenal. Sales up 64.24% over the past 5 years.
Incredible sales growth. But what about the actual financial health behind that number?
This is where Nvidia really shines. It's almost unbelievable, like you said. Gross margin, almost 70%, 69.85%. And the profit margin. Over half their revenue becomes profit, 52.41%.
52% profit margin.
Yeah.
That's huge. That speaks to serious pricing power.
It really does. And look at the returns. Return on equity, ROE, is 109.42%. They're just incredibly efficient with shareholder capital.
And the balance sheet looks clean, too.
Oh, yeah. Very clean. Current ratio is 4.21 tons of liquid assets, covering short-term debt. And debt itself, very low. Debt to equity is just 0.11. Financially, they seem, well, bulletproof.
Okay, so financials are stellar. How's the stock actually been behaving, the technicals?
It's volatile, beta of 2.12, so it moves more than the market. But the performance, wow.
I bet.
5-year performance is 338.94%, just staggering. And right now, it's traded just 1.46% below its 52-week high. Relentless upward momentum.
Which probably explains why analysts are so bullish.
Exactly. The recommendation is a near unanimous buy at 1.33, and the average target price is $218.54.
Whoa.
Way above where it is now.
And the news is all about AI, right? That big OpenAI deal, but also maybe some competition worries from Huawei.
Those are the big narratives, yes.
Yeah.
But here's something really interesting from the insider activity data.
Oh, what's that?
The CEO, Jen Hsun Huang, he's been selling shares consistently, like 75,000 shares almost daily through September 2025.
Daily? Wow. At what prices?
Mostly in the 175 to 182 range. We're talking tens of millions of dollars worth of stock being sold every month.
Huh. Okay, wait a second. If analysts see it going to $218 and the company's financials are amazing, why is the CEO selling so much stock, seemingly near the top?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question here. It's a definite point of friction for anyone looking at this, something you really need to consider.
Yeah, definitely food for thought. Okay, let's do that paper money math. That 5-year run was incredible.
Right, 338.94% gain. So if you'd put, say, $10,000 into NVDA, 5 years...
You'd be doing pretty well.
Yeah. Your investment would have multiplied by roughly 13.39 times. That $10,000 would be worth about $143,894 today.
So paper profit of around $133,894. Not bad.
Not bad at all.
All right, so that's Nvidia, the leader, profitable, but maybe some questions around valuation and insider selling. Now let's pivot to Intel, ticker INTC. Very different story here, right? The old guard trying to make a comeback.
Completely different. Less about current stability, much more about a high-risk turnaround bet. Almost a momentum play.
Yeah, the basic numbers show that immediately. They're actually losing money.
Correct. Negative EPS minus 4.76. So you can't even calculate a standard PE ratio. And the market cap, $161 billion. I mean,
Yeah.
compare that to Nvidia's trillions. It's just a different league right now.
But the hope isn't about now, it's all about next year, isn't it, that forecast?
Exactly. The source material points to an expected EPS growth next year of a huge 423.00%. That's the entire bull case, really. Investors are buying that future potential.
And if they pull it off, the valuation could look cheap compared to peers.
That's the argument. The price-to-sales ratio, PS, is 3.03. Now, remember, Nvidia's was way up there, like 26.75.
Right.
So you're paying just over $3 for every dollar of Intel sales. If they actually achieve growth and get re-rated closer to their peers, well, theoretically, there's a lot of upside.
Theoretically. But the current financial health still looks rough.
It does. Negative profit margins, minus 38.64%. Gross margins are weak, just under 30%. Returns are negative. ROE is minus 19.24%. And liquidity, it's tight.
How tight?
The quick ratio is 0.92. That means their most liquid assets barely cover their short-term debts. Compare that to Nvidia's 4.21. Intel is running much leaner, maybe too lean.
Okay, so financials are weak, future hopes are high,
Yeah.
but the stock price itself has been doing something crazy lately.
This is the really interesting part. Despite the weak fundamentals, the price action has been explosive. Performance just in the last quarter was up 53.93%.
54% in a quarter. Wow.
And that sharp rally pushed the RSI, the Relative Strength Index, up to 75.03.
Which is usually considered overbought.
Firmly in overbought territory, yes. Often signals that a rally might be overheated, maybe due for a pause or pullback. It's a potential sell trigger for technical traders.
And what's even weirder is the price compared to what analysts think it's worth.
Exactly. The closing price we see here is $34.48. But the average analyst's target price is only $26.09. And the overall recommendation averages out to like a hold, maybe even leaning towards sell.
So the market momentum is just completely ignoring the fundamentals and the analysts right now? What's fueling that?
It seems to be news and, frankly, politics. There was big news about a partnership, maybe an investment from Nvidia. They're reportedly seeking investment from Apple, too.
Okay.
But crucially, there's the whole U.S. government push the CHIPS Act, trying to bring chip manufacturing back onshore. There's talk of potential government equity stakes in companies like Intel.
So investors might be betting on government support as much as the company's own turnaround, a non-market catalyst.
That seems to be a major driver, yes. Betting on Uncle Sam, essentially.
Interesting. Okay, let's run the paper money on that recent surge, that 53.93% quarterly gain.
Right, so $10,000 invested about 90 days ago, beginning of the quarter.
It would have grown quite a bit.
It would have grown by 53.93%. So that $10,000 turns into 15,393 processors, a paper profit of 5,393%.
A quick profit, but purely based on that momentum and news flow, not underlying profits. Very different from Nvidia's long-term story.
Totally different risk profile.
Okay, let's move to our third company, Advanced Micro Devices, AMD. Kind of the challenger, sitting somewhere between Nvidia's dominance and Intel's turnaround gamble.
That's a good way to put it. AMD offers a sort of middle ground, still a big company, $261 billion market cap, but again, dwarfed by Nvidia.
Valuation-wise, how do they stack up?
The trailing PE is very high, like Nvidia's, at 92.88. But similar to Nvidia, the forward PE drops significantly, down to a more reasonable 27.13. Market expects strong growth here, too.
Okay, but what about that PEG ratio again? We saw NVDA at 1.47. Where's AMD?
AMD's PEG is quite a bit higher at 3.01.
3. So if 1 is fair value and 1.47 was maybe a bit ahead, 3.01 suggests the market is pricing in really aggressive future growth compared to current expectations. Maybe too aggressive.
It certainly suggests the price might have run significantly ahead of its expected earnings growth rate, maybe more so than its peers. The valuation looks stretched on that metric.
But are they actually delivering growth right now?
Oh, yeah. They are showing real progress. Sales quarter over quarter jumped 31.71%, and EPS for the quarter, up an amazing 230.45%. So they are definitely executing and growing.
And financially, are they solid? More like Nvidia or more like Intel?
Much more like Nvidia. Pretty solid. Healthy margins, gross margin at 43.20%, profit margin around 9.57%. Not Nvidia levels, but healthy.
And debt.
Very low debt, just like Nvidia. Debt to equity is only 0.07. And their liquidity is good too. Current ratio is 2.49, so well-managed balance sheet.
Okay, stable finances, good recent growth. How has the stock performed technically?
It's actually a bit mixed lately. Reflects that intense competition, I think.
Yeah.
Performance over the last month was negative, down about 4.28%.
A recent dip.
Yeah, but zoom out 6 months, and it's up 56.33%. So strong longer-term trend, but some recent weakness. It's also down about 13.5% from its 52-week high. And the RSI, it's neutral, around 50.86. Not overbought like Intel.
So the main story here is just duking it out with Nvidia, trying to win those AI deals, like that Cohere partnership.
Exactly. It's all about competing for data center share, securing those big AI infrastructure contracts.
Yeah.
Analysts still like them, though. Recommendation is a strong buy, overall 1.74 average, with a target price of $191.22. That's well above the current price, around $161.
Okay. And are we seeing the same insider selling pattern here as with Nvidia?
We are, actually. Another significant sale. CEO Lisa Su sold a large block, 225,000 shares, back in August 2025.
How much was that worth?
Valued at roughly $36.89 million. So again, you see a top executive cashing in substantial amounts while the stock is high, even as analysts are predicting it goes higher.
It's a pattern, isn't it? Something investors definitely need to notice across both these high-flying chip stocks.
Absolutely. Okay, let's do the final paper money calculation for AMD. We'll look at the 5-year performance.
What did they do over 5 years?
Performance was 107.67%. Solid gain.
So $10,000 invested 5 years ago.
Would have grown by that 100.67%. Your total portfolio value would be about 20,767%.
Meaning a paper profit of 10,767%. Good, but clearly highlights the difference in scale compared to Nvidia's run over the same period.
Exactly. Strong performance from a challenger, but not the same explosive growth seen by the leader in that specific time frame. #outro. So when you step back and look at this screener analysis, what really stands out is just how different these three companies are, even within the same hot sector.
Yeah, 3 totally different stories. You've got Nvidia, the leader, incredible financials, but that valuation is sky high and the CEO is selling a lot.
Then you have Intel, all about the turnaround bet. High risk, potential high reward, fueled by momentum and political tailwinds despite really weak current numbers. You're purely buying the future there.
And AMD in the middle, the solid challenger. Profitable, low debt, growing fast. But maybe that PEG ratio suggests the price has gotten ahead of itself. And again, insider selling.
Right. It really paints a picture of this whole AI-driven market. You see investors rewarding different things. Proven profitability, turnaround potential, competitive positioning. It's reacting to future narratives and geopolitics just as much as current earnings.
It really shows the market isn't just one thing, right? It can hold these seemingly contradictory ideas, valuing stability here, extreme risk there, solid profitability somewhere else, all at the same time.
And maybe the final thought to leave you with, considering that heavy insiders selling at both Nvidia and AMD,
Yeah.
you have CEOs selling tens of millions in stock while analysts are pounding the table saying buy, buy, buy. Does that executive action really line up with the super bullish long-term outlook? Or could it signal that maybe, just maybe, the easiest, fastest gains are already in the rearview mirror?
That's definitely something to chew on. A disconnect between executive actions and analyst forecasts.
Something for you to mull over.
Well, thank you for digging deep into these semiconductor giants with us today. We hope this breakdown gave you the quick, thorough knowledge you were looking for.